This is Rod Kusin, Spooman for Risk. Today's video for October 22nd, 2009, all times shown are Central Standard Time. We're focusing our attention just on a little something to help some of you see the significance of the premium. We have on our chart a 1-minute ES chart, and underneath it is the S&P premium. We've put in the fair value line, which is the horizontal line here, our typical standard new highs and new lows, which we're not going to pay too much attention to today, but we've also just for the sake of illustration, just thrown a simple moving average, 4-bar moving average, and notice the correlation between where the average of the premium is compared with fair value. Now, if you look at the big drop that took place yesterday, notice where the average was for the premium during that very significant drop. And that continued on into the morning, where finally right in here, right there, she began to move above the fair value line, which just so happens to be right at about the low of the day. It maintains itself above the fair value line for the most part, but then begins to drop, and we don't see any significant movement during that period of time. So she drops off here, and we don't see much of a movement. Later on, however, we begin to go above the fair value line predominantly. It stays above, and then as it takes off, so do the Spoos. So point of the matter is, yes, the premium can be very useful in understanding the overall direction of the market, where it's going in relationship to where the premium is compared to fair value. And the average line here is just simply helping you visually to realize what's taking place here. So if the bottom line is, in terms of reading it, if on the average, if the premium is below fair value, the market should be dropping. If it's above fair value, the market should be rallying. Pretty simple. And that's in fact what we see happening here. Now let's take a look at a couple of other things. Right in here, you notice, and we have not checked to be sure that this is not an anomaly, but it certainly is unusual, and that is where the lows of the premium bar are considerably above fair value. The market is going to take off, and that's exactly what you saw take place here. What happened here, the premium was so high in relationship to the rest of the day that pretty well governed the overall market direction for the balance of the day. That's a huge spike up. Okay? And with the lows of the premium way above fair value, that's pretty unusual. It's rare, to be sure. So, a little bit more on reading the premium. We are going to be coming out with an adjustment, I shouldn't say an adjustment, really an enhancement in our strategy, probably within the next week, and we'll be looking for some excellent videos on the subject of the tick and how we're now using the tick according to certain rules of divergence to precisely indicate where market turns are likely to take place. So look for that in the days ahead. This is Rod Kusin and Spoon for Risk.